It started quietly. No mass layoffs, no headlines, just a few missing faces in offices overlooking Manhattan's skyline. But within months, entry-level desks once filled with ambitious Wall Street analysts were empty, their tasks now completed by algorithms working faster, cheaper, and with an unnerving accuracy. The shift isn't a distant prediction, it's happening right now. The warning Gates already gave. Bill Gates saw this coming. The billionaire Microsoft co-founder has been telling young graduates to embrace AI tools, not because they're optional, but because they're the future. He called them fun and empowering, but he also admitted they wouldn't guarantee job security. Embracing AI and tracking it will be very, very important, he said. That doesn't guarantee we're not going to have a lot of dislocation. Gates hasn't changed his core advice. Be curious, read, and always use the latest tools. But the job market for young professionals in 2025 is shifting at a pace that even seasoned tech optimists find unsettling. And finance is proving to be one of AI's fastest takeover targets. Wall Street without the new recruits. Until recently, breaking into the world of finance meant working punishing hours as a junior analyst, digging through market data, building pitch decks, and scanning financial reports. These were the rites of passage that shaped future managing directors. But in firms from Manhattan to Hong Kong, AI is now doing that grunt work in seconds. Take Carlyle, one of the largest global investment firms. For years, entry-level analysts researched deals by scouring news articles, requesting documents, and cross-referencing data. Now, AI handles the same process instantly. Instead of hiring large classes of junior analysts, the firm is looking for smaller numbers of junior-level employees who can verify AI output, spot inaccuracies, and make judgment calls machines can't. The same trend is spreading across financial services. In the past, automation hit back-office functions, first accounting, payroll, basic compliance. But generative AI has reversed that order, going after the front lines of white-collar work. The time horizon that decides your fate. The secret to understanding why these jobs are disappearing lies in a Silicon Valley metric known as the time horizon of tasks. It's a way of measuring how long an average human takes to complete a task and tracking whether AI can match that performance. Right now, AI can handle tasks of about 20 minutes with 80% reliability. That's enough to cover a client call, a financial summary, or a blog post. Jobs filled with such short, discrete tasks like call center work, freelance writing, paralegal drafting, or yes, entry-level investment analysis are first in line for replacement. According to research from METR, AI's time horizon is doubling every 3.5 to 7 months. If that pace holds, AI agents could handle month-long projects within a decade. For Wall Street, that means the technology won't just replace junior analysts. It could start chipping away at more senior roles. This isn't the automation we expected. It wasn't long ago that experts assumed automation would first take manual jobs factories, agriculture, and transportation. But AI has upended that forecast. The skills we thought were untouchable, writing, programming, producing research, are now among the easiest for AI to master. Meanwhile, physical dexterity, empathy, and human connection remain far harder to replicate. That's why people like Annabelle Beals, a copy editor who thought she'd secured her dream role in 2023, are losing jobs faster than her colleagues in manual work. After 8 months, she overheard her boss telling staff to just put their writing in ChatGPT. 6 weeks later, she was unemployed. The autonomy factor. Current AI systems still need human oversight, which is why companies insist they augment rather than replace. But that doesn't necessarily mean more jobs. If one person can now do the work of 3, headcount drops. The real shift will come with autonomous AI agents, capable of operating without supervision for long periods. In June, an event in San Francisco was organized entirely by such agents. No human planning, no manual scheduling. The venue was just a public park, and catering was non-existent, but 26 attendees still showed up. That experiment is now expanding, with the same AI agents launching their own merchandise store. On Wall Street, the idea of autonomous trading desks, due diligence bots, and AI-led M&A strategy sessions is no longer science fiction. Startups like Artisan openly advertise to employers, "Stop hiring humans." The remote work red flag. The pandemic revealed another warning sign. Roles that could be done entirely through email, Slack, and Zoom became automation-ready almost overnight. If your job can be performed from anywhere with just digital tools and clear instructions, AI can do it too. That reality is driving some Gen Z workers toward jobs AI can't yet touch: licensed trades like plumbing, construction, and electrical work, or people-focused roles in healthcare, education, and social work. These fields not only require physical presence, but also thrive on human connection. A choice, not a fate. The most important thing to remember is that AI deployment is a choice, not a force of nature. Governments can regulate, slow, or shape its rollout. Keir Starmer's AI Opportunities Action Plan makes that point clearly. Technology must work for working people. That requires understanding which jobs are most vulnerable and protecting those workers before displacement happens. Some proposals include taxing AI agents like human workers, using that revenue to fund worker retraining and economic security programs. Others suggest giving every citizen their own AI computing allocation, ensuring the technology doesn't become the exclusive property of a few corporations. The stakes for Wall Street. Finance has always been about speed, information, and accuracy. AI now offers all three at levels no human can match. The firms that adopt it fastest will dominate, at least in the short term. But if history is any guide, the social and economic aftershocks of displacing an entire tier of white-collar workers could reshape the industry as much as the technology itself. Wall Street analysts were once the lifeblood of deal-making. Now, they may become the first high-profile casualty of a new era, one where intelligence is infinite, tireless, and available at the click of a button. What do you think? Would you trust an AI to make the calls that decide billions of dollars in investments? Let us know in the comments. Because whether you say yes or no, the machines are already here. And they're not waiting for permission.